Good afternoon, partners. This is Troy Eckert with Eckert Global. One of the things I wanted to do this afternoon is that many of you have just committed and funded the Tyng prospect, which will be drilled in about 30 days down in Victoria County, Texas. And since I don't have the luxury of traveling around the country and explaining the prospect one-on-one, although you're already an investor, already written a check, you're participating with us on the well, what I wanted to do is walk you through and remind you of what we're doing on the prospect, so that way as we drill it and put it online, you have a better understanding of the process that we go through. So let me give you a little background real quick on what's going on currently in the oil and gas market with regard to vertical wells, why Eckert Global itself is not really participating in conventional shale or non-conventional shale wells, and why the time made sense. I'm going to keep this very short, but I think it'll be effective for you. First off, over the last 5 or 6 years, as we all know, the shale boom in the United States has been very enormous in size, enormous in activity. But there's a lot of 65 and 70-year-old geologists who have been looking for reserves for the last 40 years very successfully, which is how Exxon and Chevron and Shell and all these majors built their billion-dollar fortunes. They built it off of geologists and geophysicists who know how to find oil and gas reserves through conventional exploration. Conventional exploration simply means we don't have to have horizontal drilling, we don't have to have frac stimulation. We're looking for buried river channels and seabeds and big hydrocarbon buildups that can be deflected or at least reflected off of 3D seismic and 2D seismic and previously drilled wells and all the data that comes with that. Well, the Tyng is one of many prospects I've been looking at over the last year, and what I have come to the conclusion is that these geologists and these geophysicists have spent the last 6 years hunkered down in a bunker working their tails off to work out the details of seismic and subsurface information and well logs to try to ascertain where there's some really good prospects left to drill. And candidly, I'm looking you right in the eye telling you I have not seen this high a quality prospect in 10 or 15 years. What we're seeing is drilling ideas that are being generated by 40+ year seasoned experts. The participating parties in these wells are geologists, geophysicists, chemical engineers. The whole litany of participants are in the business, and so you're getting a lot of high scrutinization of the prospects with regard to, does it make sense? Are the terms fair? Is it got good seismic? Does it have good geology? Has it got good terms? Who's the operator? Are they competent? And I wanted to kind of just walk you through why the Tyng's being proposed. I give it an 85+% chance of success because it has multiple pay zones. I'm very familiar with 3D seismic. I've probably drilled 300+ wells off of seismic since 1997. I understand it. We participated in almost 13 different seismic shoots covering about 3 million acres over the last 25 years. So this is right in my wheelhouse. This is what I'm an expert at. I love this type of drilling. And you as a participant just need to understand that we are taking on a little bit different beast than we normally do in a shale well. You're not going to get a 99% success rate. But what you're going to see in these types of wells, when they come online, it doesn't have a 65% decline. They can pay out in 2 and 3 months. In some cases, they can pay out as little as a year. We don't need a lot of oil and gas produced to break even, and we sure don't need a lot of oil and gas to make 3, 4, 8 times our money. So I'm going to go ahead and go through this prospect, take about 3 minutes, show you what you've already invested in, what we're going to do, and what your expectations are. And if you have any questions, you're more than welcome to call us back and talk to me on the 800 line. I'll answer any additional questions you might have. So first off, the Tyng prospect is in Victoria County. For those of you who may not understand this, is that when you look at the band that goes from South Texas all the way over to Florida, essentially that band is a buried Gulf of Mexico 10, 20, 50 million years ago. So there is a tremendous amount of oil and gas that's been buried in what used to be old tributaries, rivers and streams and beds. And like right now in modern day Texas, if you go north of Houston, Houston itself is actually below sea level. So this was a really big environment for hydrocarbon deposits and material. And what the geologists and geophysicists have figured out is that this entire band from southern Texas all the way to Florida millions of years ago was nothing more than the current day Gulf of Mexico, which is loaded with organic material. So Victoria County is a very prolific county. It's been well developed, but believe it or not, it's like Easter egg hunting. No matter how many kids are out there, there's plenty of Easter eggs that are never picked up because they didn't know how to find them or locate them. Well, that's where advanced technology like seismic and reprocessing comes in place. In this case, we're going to take a 225-acre lease. We're going to end up drilling a well to about 5,200 feet. It's called total vertical depth. It'll be a well that we believe, or at least the experts who picked the prospect, have measured about 220,000 barrels of oil and about 1.9 billion cubic feet of gas. And of course, what we're doing is we're participating. Originally, we're going to take 10%. we've decided we're going to take upwards of 30%, and we're looking at the last 10% as a possible participation. One of the reasons I increased the interest from 10% is as I started to talk with the additional participants in this well, it's made up of engineers and geologists who they themselves are investing their own money and looking for very low cost recovery prospects and drilling. And the more I evaluated the Tyng prospect, the more comfortable I felt that this prospect is extremely low risk with very, very good reserves for an upside. Could be wrong, could be dry. I believe we're going to find ourselves more than one pay zone. I believe we're going to find ourselves with some excellent reserves in a very shallow, inexpensive well. And again, this touch screen. Okay, so let me just tell you kind of how this works. So in 3D seismic, if you think about the earth in cross sections, as they start from the surface and drill their way down, there's all these buried sands that come across at different time intervals during depositional positioning. And so what the geologists or geophysicists do is they look at existing well bores, old well bores that were drilled from previous wells. They take what they call empirical real-time data and they put that into the 3D seismic that's on the computer screen with all the advanced software. They then take a look at the same kind of features, meaning amplitudes or signatures, which are a change in volumes or velocity of sound, and they try to depict whether that's shale or sand or limestone or oil or water or gas. And as the saying goes, if it looks like a duck, walks like a duck, there's a high probability it is a duck. But it's a lot more sophisticated than that. In this case, what these geologists have done is they've taken an older 3D seismic data set, kind of like having a 1992 computer, and they took that information, they dumped it into an upgraded computer and an upgraded software package that has corrected and made adjustments in the original 3D seismic survey based on all the exploration that's happened in the last 20 plus years. And so what they get is they get a really, really advanced seismic data set through the software. They put it into a very, very fast computer compared to what we had 20 years ago. And now what they get is an output that says, wait a minute, we've got a prospect sitting right here in the middle of this field, What we end up with is we end up with a location that because of the depositional environment, it has multiple pay zones stacked one after the other. I'm going to go back real quick. There we go. And so what will happen is, this is a very touchy screen by the way, what will happen is that the geologist or the geophysicist, the team that put it together, they look for a surface location like kind of threading a needle, and they try to drill a location that will end up picking up as many of these potential sands as they can get. Now I probably have drilled 200 little shallow wells like this above 10,000 feet in the last 20 years. And what I have found is that you may find the shallowest sand may have 10 feet, 30% porosity, and decent permeability. But you may not complete that for 7 to 10 years because it's the last one pressure-wise before you ever abandon the well. The deeper you go, the higher the pressure, and typically the larger the reservoir. Not always, but most of the time, because it means it has a higher compaction of those organic materials. Now here's something you need to know. We may tell you there's 5 zones or 4 zones in this well. We may end up getting 9 zones, we may end up getting 2 zones, we don't know. What we do know is that there is a traditional event that occurs along the Gulf Coast of the United States that we like. It's called serendipity. Sometimes when you drill a well and you think you're going to find 4 zones, you end up with undetected formations that were not visualized on the seismic. It's because the zone above it deflected the sound waves, the zone below it absorbed the sound waves, and a 20-foot sand was never picked up on the seismic. So I like a prospect that has clarity, that clearly shows we have multiple pay zones with individual isolated sands, but I also like the fact that there's many sands that can occur in between these mapped out and deflected sands that we can actually penetrate. So let's get down to really what it boils down to. There we go. All right. When we make this investment's broken into 2 parts. The first thing is we're going to put up drilling and testing of about $7,000. What does that mean? That means the geologist, the geophysics, the drilling, the completion. It's a turnkey drilling contract. And what it means is that you and I get to see the bottom of that well down to the intended total depth of 5,200 feet. They're going to pull out an electric well log, and they're going to look at it and say, do we have what appears to be hydrocarbon-bearing formations? When that decision is made, usually it's 3 o'clock in the morning, like babies, they never come during the day, the partners involved will take a look at that log and they'll say, based on what we thought we were going to find, what the well log demonstrates, do we want to spend the completion money, a couple, $200,000 or $300,000, to run tubing and pipe, put a wellhead, tanks and equipment, and complete the well? Well, I can tell you this, that there are very, very tough economic decisions made out on that rig floor and out in that logging truck at 3 o'clock in the morning, because what we never want to do is throw good money after bad. And so when we look at our well log interpretation, we're going to try to mathematically calculate what we found, dump it back into the 3D seismic, or at least analyze it based on 3D seismic, and try to determine what kind of quantity, production rate, and rock characteristic that we have. The good thing for you is that the completion money, the $3,300 for completion, is not at risk until we feel relatively confidently that we have a zone or zones worth completing. I like that in vertical wells. When you're in a shale well, you don't get that decision. You're going to go drill an $8, $9, $10 million Bakken well. They're going to drill it, complete it, frack it, stimulate it, and flow it, and you don't really have a clue how much reserves are in it, because you just have to go off statistical averages. Now, it's great because you're going to complete a well 99% of the time, but at least in the case of vertical wells, because of the 3D seismic, you have a way of trying to quantify the amount of oil and gas that may be in place and actually do some economics before you decide to spend the back 33% of your money. Okay? And once again, there we go. All right. So I guess the way I was going to conclude this is as follows. I've been doing this a long time. It'll be 32 years this coming May. As much as I like to think about conventional drilling, sometimes when you drill dry holes, you feel like you've been run over by a Mack truck. But I have been involved in hundreds of successful completed wells that have made billions of cubic feet of gas and millions of barrels of oil. And I have been involved in so many 3D seismic shoots, I can't even put them on my hands or my toes as far as counting them. What I'm seeing right now has me more excited than I've been in a long, long time. And I know you guys say Troy gets excited about everything, but I'm being very candid with you. What I'm seeing right now is some of the best drilling prospects I've seen in a decade or longer. This is not a 25-year-old geologist or a 30-year-old geologist who drilled a couple of wells. These are 65, 70, 75-year-old geologists. A well I just committed to this afternoon, it's an 80-year-old geologist that located the prospect. He's taken 35% of the well with his own money. I didn't have geologists taking interest in wells with their own money back 10 or 15 years ago. They would find them, promote them, charge a fee. We'd all take the risk. If it's a dry hole, they said, sorry about that. What I'm seeing now is guys in the business that have been geologists and geophysicists are spending their time saying, you guys go have fun in the shale. Leave all this conventional drilling to us. We'll take all your data and all your information. We'll take our time and we'll go generate these prospects. We're going to take the cheapest, lowest drilling price we've seen in 25 years, and we're going to go make ourselves a lot of reserves. And we're going to find these reserves at below $5 a barrel, below 65 cents an MCF of gas. We're going to put our own money up. We're going to take 50, 60, 70% of the well, and we're going to go to guys like Troy, some engineers, some geologists, some other guys in the business. And we're going to say, look, why don't 20 of us get together and take a piece of this well? I like that. I like it because I'm going to have a lot of smart people evaluating it before, during, and after it drills. I'm going to have a lot of engineers and geologists and geophysicists looking at that well log to decide if we complete it. I like it because we're going to be side by side with them. The only difference between you investing directly with the prospect generator is you pay me a fee to do it, because I'm going to look at a dozen, 3 dozen, 5 dozen prospects before I find one I want to drill. I'm turning them down left and right for all types of reasons. But in the case of the Tyng, this is a simple, simple prospect. We should drill it, take us 7 to 8 days to get to bottom. We'll log it. If it's good, we'll run pipe. We'll be ready to complete it in 7 to 10 days. It's my belief this well will spud sometime around the second week of December. We probably will not perforate it and turn it online and flow it till the middle of January. We don't want to pay the taxes to the tax man in the county of Victoria for the reserves, because if we turn it on before December 31st, he's going to tell us how much reserves he thinks we have that we owe taxes on. If we turn it on after January 1st, we don't pay those ad valorem taxes in 2016. Well, I'm about to head home for the weekend. I've got about 4 more prospects that I'm working on. One that I committed to this morning. I don't know how fast it's going to go, but we only have 10% working interest. I'm going to try to take 2 or 3% with my own money. It's going to be about $17,000 dry hole cost. It is an incredibly strong prospect, but something you need to know about it is it has a lot of acreage, 850 plus acres. It is covering multiple prospects, so when you buy it up front, you're in what they call the project or prospect area. The 2 guys that generate are keeping about 50% of the well themselves, and at this point, they've got about 10% left. I took it. Whether you participate or not, I'm ready to drill it in 30 days. They're moving a rig out probably second week of December as well. This well has a lot of reserves, a lot of potential, and if we're correct, we probably got 10 or 15 wells to drill in a number of different sands and formations throughout this 800 acres. So again, Troy Eckert, I'm the guy leading the ship. I'll make sure we get through these charter waters safely. One thing you'll know is you'll get a straight scoop, straight skinny. Maybe some of you can come down and join me on the rig when we log the wells. That's a heck of a lot of fun, especially when you log a big fat sand. And we're going to make a lot of reserves over the next 6 months. So get your checkbook out, tell your buddies and friends, line yourself up. We're going to take about 10 or 15, 20% each well and do this over the next 6 months. Rig count was up 15 rigs today. That means drilling prices are going to go up in the first and second quarter. We got to take advantage of this economic opportunity right now. Again, thanks for being in the Tyng Prospect. You guys have a great weekend.